The sun is not up yet, but the lights are on in Kwethluk. Rural Alaska has grown dependent on electricity, and without it, lives would be disrupted.
My name is Harry Jackson, and I work as a power plant operator for Kwethluk Incorporated. Without power, businesses would be closed, airport runway lights wouldn't work, freezers wouldn't be operating.
Safe and reliable electricity in rural Alaska is expensive. Electric rates are much higher than they are in urban areas of the state. In 1984, the Alaska legislature established the Power Cost Equalization program to help make electricity more affordable for rural communities. The Power Cost Equalization program, or PCE, pays a portion of the eligible customer's bills through a reimbursement to the participating utilities for credit that's applied to each of the customer bills. If PCE did not exist, many people would have a hard time keeping up with their electricity bills. Additionally, the PCE program provides the utility a regular cash flow that's needed to operate the utility, purchase fuel, and to pay for maintenance and other administrative expenses. Two separate state agencies administer the PCE program, the Alaska Energy Authority and the Regulatory Commission of Alaska. The Regulatory Commission of Alaska calculates the PCE rate after analyzing the utility's rates and what it costs the utility to provide power to its customers. The PCE rate is the amount of money per eligible kilowatt hour that will be credited to an eligible customer's bill. Once the PCE rate is established, the Regulatory Commission of Alaska, or RCA, will send the utility a letter order that sets out the PCE rate or rates and their effective date. The Alaska Energy Authority, or AEA, then distributes payments to the utility after receiving the PCE utility monthly reports that include cost and sales information for the utility. Because public funds are used for the PCE program, it is essential that the money they are dispersing goes to eligible customers only. Information about cost and sales can also help utility managers determine if their businesses are operating efficiently. This information comes from many sources, including plant logs, meter reading sheets, and accounting information. In Kwethluk, the bookkeeper is information central, making sure information is available when someone needs it. This can be a challenging job. The PCE program means money going out to the community. Between fiscal years 2004 and 2005, the average program demand was along the lines of $20 million per year. Funding appropriations for the PCE program are made annually by the State of Alaska Legislature and usually require a pro rata reduction to full funding. By learning what's necessary for filing the forms with the Regulatory Commission of Alaska and the Alaska Energy Authority, a new utility clerk is contributing something to their community that nobody else can. It takes at least one key person to pull all the information together and send it in to continue receiving PCE credit. This video training program will help you learn how the PCE program works and how good record keeping makes report filing easier. It will also explain how to fill out the Alaska Energy Authority Utility Monthly Report, the annual PCE report, and fuel price change forms for the Regulatory Commission of Alaska. When completing your reports, remember that there are people on the other end of the telephone, fax machine, or email that are ready to help you. In 2005, 86 utilities serving 183 communities with a total population of about 79,000 were eligible to participate in the PCE program. Residential customers can receive PCE credit on up to 500 kilowatt hours of electricity used each month. Each customer must pay at least 12 cents or the base rate per kWh and make regular payments to the utility for the portion of their bill that is not covered by PCE. The only costs that RCA will consider in calculating the PCE levels are costs that are deemed to be just and reasonable. For instance, the RCA has disallowed from PCE consideration the cost of a trip to town to pick up a filter or fan belt because it could have been sent out by regular mail for less than $1 or by express mail for less than $20 instead of $175 spent on someone's airfare to pick up this small part. A utility bookkeeper uses the PCE rate to calculate the credit due each customer. The bookkeeper then credits individual accounts and requests a reimbursement payment from the state. PCE also helps pay electricity used for community facilities. Community facilities are defined in state statute as a water and sewer facility, public outdoor lighting, charitable education facility, or community buildings whose operations are not paid for by the state, the federal government, or private commercial interests. In Queethluck, the clinic, the IRA office, the washateria, library, and streetlights all qualify as community facilities. But some of the facilities in your community may not qualify as a community facility. For example, a laundromat would not qualify as a community facility if it is run as a for-profit business. If you're not sure if a facility qualifies as a community facility, contact the Alaska Energy Authority prior to giving that facility credit. Participating utilities must meter each customer and meet efficiency standards by selling a certain amount of electricity for each gallon of fuel consumed. Customers will pay more of the actual cost to generate the electricity when generation and transmission are inefficient because the PCE rate is calculated as if the efficiency standard is being met. The utilities may request help from AEA's Technical Assistance Program to help meet these efficiency standards. The reporting requirements of the PCE program make it important to keep accurate records of all utility expenses as well as the fuel used and the cost of that fuel. The amount of electricity generated, electricity consumed, and customer billing and payments are also important pieces of information to keep track of. Ledgers, journals, logs, and check registers are important tools for a bookkeeper to have in order to complete their PCE reports. No one financial record-keeping system is required by the PCE program, but yours should allow quick and easy access to information for completing reports and for giving utility managers the information they need to make important decisions. Good record-keeping helps the utility in determining their expenses and what rate needs to be set in order to recoup those expenses. It also gives them the opportunity to find out when to replace the generator or to replace the oil and determine whether or not they're running efficiently. You may also want to use the summary customer ledger, such as this one, to summarize information for all customers each month. The Alaska Energy Authority recommends use of this customer ledger or something similar to provide the backup documentation that's required. Customers are listed in the far left column and identified by category: R for residential, C for commercial, CF for community facilities, and UB for unbilled customers. Some communities have non-billing or unbilled customers, such as this church in Queethluck, which is provided with free electricity. Still, note the amount used by the customer on the customer ledger. Non-paying or unbilled customers are not eligible to receive PCE credit. This information helps show that electricity generated was used, not lost, during the transmission due to faulty equipment. Let's say John Doe is a residential customer, meter number 101. To show how much electricity he used last month, enter the most recent meter reading and subtract the previous month's reading. Meter readings should be done at the same time each month to provide accurate information about how much electricity was used in a one-month period. Mr. Doe used 300 kilowatt hours of electricity. Multiply that by the utility's electric rate to get the amount he would pay if there was no PCE. Figure the PCE credit next. John Doe is entitled to credit on all 300 kilowatt hours since he used less than the 500 allowed maximum. Multiply the number of eligible hours by the PCE rate, give the amount of credit to be applied to his bill. The next four columns show the state that he's fulfilling his responsibility to pay the remaining cost. The amount he owes in the current month is the gross amount due minus the credit, add in the amount of the last bill, and subtract any payment made during the last month to get the total amount the customer still owes. Information for all other customers should be entered the same way. Be aware that the rates charged to different types of customers may vary. Your utility board may have concluded that commercial customers, elders, schools, or other types of customers should be charged more or less than the basic residential rate. Electricity used by community facility rarely exceeds the maximum allowable 70 kilowatt hours per resident per month. But if it does, your utility board must determine how to allocate the credit. A completed customer ledger will make it easier to fill out the utility monthly report required to receive PCE payments from the Alaska Energy Authority. Double-check the information on the customer ledger to make sure it's the same as the information on the customer's bill. The PCE Utility Monthly Report must be submitted to the Alaska Energy Authority within 10 working days of the date the customer billings are completed each month. If a utility waits 2 or 3 months to send in their report, they don't have the PCE revenue available to pay for operations and fuel. They run the risk of missing the filing deadline, resulting in a loss of the PCE credit to the utility. The first part of the monthly utility form asks for the billing period. the dates meters were read, and basic information about the utility, including whether or not it's regulated by the Regulatory Commission of Alaska. The contact person listed in this section of the form should be the individual the AEA can contact regarding the information reported. Section A. The community population figure in this section is provided to the utility by AEA at the beginning of each fiscal year and should be used throughout the year. The second part of Section A asks for the number and types of customers served by the utility. Section B requests information on how the utility's electricity is produced and how much it costs to produce that electricity. In addition to diesel generation, all other types of generation are required to be reported, such as wind and hydro. Bookkeepers rely on plant operator logs for information and about how electricity has been produced and how much fuel has been used. Fuel and non-fuel costs should be found on the check register, payroll, and other journals. Show the amount of electricity the utility purchased, if any, in Section C, also the amount of electricity sold, and the types of customers who bought that electricity, including unbilled or donated power. Most of this information is on your customer ledger. Plant operators provide the number of kilowatt hours used by the powerhouse and peak demand load on generators. Total of kilowatt hours used by each customer and gross billed revenues are easy to calculate when you use the customer ledger. Note the electricity used by non-paying customers under unbilled. Totals on your PCE utility monthly report should match the totals on your customer ledger. The next section of the utility monthly report is Section D, and it compares the fuel price used by RCA to determine the PCE rate and the price paid for the most recent purchase. If your fuel prices change, notify RCA with the proper form and attach a copy of the latest invoice for fuel. Contact RCA for the filing date due that has been determined for your utility. Section D also asks for your PCE rate. Most communities also only have one rate. Use the eligible kilowatt hour column of the chart to calculate the number of eligible kilowatt hours used by customers in each category. This information should also match the amount of PCE credits shown on your customer ledger. The Utility Monthly Report also has a separate page for noting the electricity used by community facilities and streetlights. The Alaska Energy Authority is only able to process your report with an original signature, so don't forget to sign and date the report before you send it in. As you can see, the bookkeeper is the key to keeping information flowing at a utility, but the entire staff must operate as a team. Keeping up monthly reports required by the Alaska Energy Authority and having a good record-keeping system will make it easier to fill out the annual PCE report for the Regulatory Commission of Alaska. The Regulatory Commission of Alaska requires utilities participating in the PCE program to file an annual report form. This report is to be filed once a year on or before the date assigned by the Commission. The RCA reviews the report to determine if a utility's PCE rate needs to be adjusted. Included in the form is an instructions page to assist utilities in completing the form. Page 1 is the calculation of the average class rates. Calculate here the average class rate for non-community facility customers using the formulas on the form. Page 2 is the calculation of the community facilities average rates. Calculate here the average class rate for community facilities customers using the facilities on the form. Page 3 is the balance sheet. Determine the utility's assets, equity, and liabilities, and fill out the form accordingly. If your utility already maintains a balance sheet for the utility, you may simply submit a copy to the Commission with your report. Page 4 is the income statement. Enter operating and other revenues and personnel expense. Complete the rest of the form by entering all other non-fuel costs, such as operating expense, from your trial balance or manually prepared schedules required by state statute. If you have costs that do not fit in the categories on the form, fill out the appropriate schedule found on page 4A and enter the total in the space labeled Other. Page 5 is the electric utility PCE data form. Enter the monthly kilowatt hours generated, kilowatt hours sold, and gallons consumed. Page 6 is the schedule of depreciation. If the RCA maintains your utility's depreciation schedule, make note on the form. If you maintain your utility's depreciation schedule, submit a copy with the filing. Depreciation is the decrease in value of major items such as generators or computers due to wear and tear. Page 7 is the certification form, which requires a signature certifying that all the information in the report is correct. Additional filing requirements for the RCA include an audited financial statement that the utility had a financial audit performed for the calendar year being reported, a trial balance if the utility maintains its records using a computerized accounting system. A utility that does not use the computerized accounting system must include manually prepared schedules showing the calculations used to prepare the income statement. Organizing your books so they track these categories and subcategories will make your job easier. The RCA will set a final PCE level after reviewing all this documentation. If you keep up with daily, weekly, and monthly entry of expenses, income, and electricity used, it'll be easier to fill out all the required forms. All these reports look intimidating at first, but remember, you can always ask for help. By keeping good records, you play a vital role in providing your community with power when you do a good job. You've helped your utility and your neighbor.